What's up, guys? Welcome back to the channel. So today you can see I took a position in Sqqq. I made a video on the inverse ETF Sqqq and where I was going to take my position. It hit my target. So we entered 1% of the portfolio, $2,100.36. So we have a cost basis of $10.68. We're going to hold this position for the day. Let's see where it goes. But let me just show you why I picked up this position. All right, guys, keep in mind this is not financial advice. Do not follow my trades. I'm a YouTube trader. I just like to post what I'm doing for your entertainment. So take a look. We're going to look at the 1-year chart on Sqqq. We are running at an RSI of currently 57 on the 1-year chart. Zooming in a little bit closer, just on the 1 day, we can see we've been having resistance in this 441 range. And I marked this off earlier in a previous video where I was showing right in this area is where I feel that there is going to be resistance. Right in this area right here. So I'm going to get rid of this line. And basically, I wanted to get it around 443. I think that's the ultimate, but I wanted to get the position in. I think I'm close enough that if Sqqq starts to have a pullback around this range, 441, I don't want to miss it. I want to see if it fails this 440, if it's unable to hold it, and then starts to pull back to retrace to the 432. That's a 2% pullback. That's a 6% gain on Sqqq. So that's really what I'm looking for. Nothing crazy. My stop loss is going to be above the 449. So if you look at it, if it breaks this 443, gets above to 449, it's about 1.68% move up. It's pretty much a 1-to-1 R, which means that I'm risking 6% on each side. So that's what I'm looking at, because when I look at Sqqq over the long term, it's just sold off. But now, when I was drawing this out the other day, I'm trying to bring it up so you can see it. I drew out these candles so you can see just this wedge. Started selling out. I do think we're going to have some support in this 10.4, 10.5 range. But like I said, I'm an early buyer. I entered my position at 10.68. That's where I'm in right now, right at this level. I'm going to hold this position, see where it goes. You know, hopefully we get a nice healthy pullback in the markets. Nothing seems to bring it down. But if we can get that 6% gain that we're talking about, that would bring us to about 11.3. 11.3 for Sqqq is about 6%, and that would be pretty good on a $2,100 investment. So let's just take it as it goes. But when I look at this, and I look at Apple, and I look at all these other stocks, they're all pumped. Apple looks pretty bullish because it had this nice bull flag coming up, consolidation. We'll see where it goes from here. But just looking at year to date, I mean, it's got resistance coming up at 190. When I also look at Tesla, Tesla's very weak. It had that bounce off of 140, and now it's bouncing back up to 200. So we'll see where it goes. And then Nvidia is trying to hold the 900 level. But when you look at Nvidia just on the 1-year chart, very bullish, but now it's in this consolidation range. So we'll see where it goes here, but it's trading in between 975 to 760. So I'm thinking, you know, sell in May, go away. So I'm going to try that method. I'm going to hold Sqqq, and let's see if the theory holds. We're going to try to, you know, hold Sqqq, get that increase 6 to 10% gain on our money. But overall, when I'm looking at Sqqq, I see that resistance coming up. I marked it out. I have my plan. I have my entry. And now let's just see if we get indecision candle here for Sqqq and then start selling off back down to this moving average at 432. But I know where my stop loss is. It's at all-time highs. So if Sqqq breaks all-time highs at 450, I take my loss and I look for the next entry. But I just wanted to break down the trade that I'm making. So I thought this was pretty interesting. Fidelity has an article saying, should you sell in May? They're saying probably not, but you should be cautious about the stocks. They talk about the key takeaways, how stock momentum has slowed a bit earlier in the year. I mean, if you look at growth stocks, they're up 45%. The article is basically saying that there are 6 months where the market does best. And it's saying from November through April is where stocks have their most rise and growth. So that's why the theory comes of sell in May and go away. But they talk about since 1990, the S&P has gained an average of about 2% from May through October. So that's a lot more risk to try to get 2%. That compares with a roughly 7% gain from November through April. And they're saying this outperformance is not just seen in large cap stocks, but also small caps and global stocks. So we're going to try that. We're going to take the Sqqq position and let's see if we can get a gain out of this. But they talk about other trends that you need to look out for. So you just got to look out for investor sentiment, measuring advanced or declining stocks, seeing what's weak, what is, strong. They talk about Q1 earnings season, the early seasons. We're just looking at tech pretty much when we look at these earnings, but you got to focus on the macro, the big picture. And then they're talking about the inflation worries, how the CPI report from March revealed a 3.5% year-over-year increase in inflation. So, where else are you going to put your money if inflation keeps going up? And I could see that's why people are buying stocks. It's the only way that you're going to be able to outpace inflation. So maybe that is a reason why the market keeps going up, or it's the election, who knows. But anyways, we'll try the Sqqq position. We'll see where it takes us. It's only a small percentage of the portfolio, as you can see, and we have good risk management with a stop loss in mind.